Hi, Nigel Backey here from Arch Capital. Hope you're keeping well. It's already somehow early September. So today a few things I want to run through, a bit about the markets and also a little bit about its tax time and some of the reports that are coming through for you. So to start with, we've just got this really quick presentation. We've seen some volatility in markets and volatility is really normal. It's always there really. When we look at monthly data and daily data over years, there's always quite a bit of movement. Unfortunately, the returns for this year have actually been probably better than many expected when we wind back the clock 6 months or a year. So things are looking okay, but what we want to talk about is market timing. There's always discussions around, should I invest now? Is there a way to benefit from predicting things, and can I predict what's going to happen next? And particularly when there's a lot of press around, well, yes, things have been okay, but they're going to get worse and there's going to be a recession or whatever the case may be. So here's some stats and some evidence around all this. So this is the impact of being out of the market for short time periods, and this is the S&P ASX 300, so the Australian market. The Standard & Poor's is the index for the top 300 companies in Australia, and it's over a 22-year period, so it's a decent period. And what we've got there is if you had $1,000 invested over that period, it'd be worth $4,932 if you stayed invested. If, however, you tried to time the market or in and out of the market, and for whatever reason you missed the best week or month or 3 months or 6 months, then what would have happened to your return? So if you missed just 1 week, your return over that whole period, a little bit less, 4,328. Not too bad, but that potentially, you've missed out on the total return. And that gets a lot worse. If you've missed the 6 months, and that's that 1 month, that 6 month period is the 1st of September 2009. So for whatever reason you thought you just want to be out of the market and wait, then your total return is a lot less than if you just stayed invested. So that's just one example. Another really good source of data around this is a company called Dalbar. Now they're in the US, a huge research company, been around for a long time, and they do a lot of research around this, and they basically study 30 years of average equity fund investors over a long period of time, and this is 1992 to 2021. And so they've got inflation, so inflation over that period was 2.36%. The average fund investor had a return of 7.13%, but the S&P 500, which is the 500 largest companies on the US market, had a return of 10.65%. So why is that so? You look at that and go, if I just stayed in the market and I got 10.65, obviously you don't want inflation, but the average investor got 7.13%. And a lot of that can be attributed to timing. So people getting in and out, their emotions getting in the way, someone telling them to get in and out of the market, whether it's a media, a friend, an advisor perhaps, and also costs and taxes. So it's a really good story. There's a lot of data to back it up. We don't just say, stay invested, those things, but for the sake of it, there's a lot of research to back that up. And from time to time, there are reasons to adjust portfolios, of course. Rebalancing, there might be more need for cash, more income, more reason to have more growth for whatever reason, but it's not because we have a crystal ball and we're trying to time the market and try to do that. There's no evidence to suggest that adds value for you as an investor, as a client. So I hope that's helpful. Also, as I mentioned, right now, all the tax reports are about to come out. So for those about to lodge tax returns or for self-managed super funds, we should have that information in the next few weeks. If you're not receiving it yourself, then we'll start to coordinate any tax affairs for you and help out in that process. As always, any questions, please reach out if you want to talk or organise a meeting. Thanks for listening.